Hey everyone, welcome back. Today, we're diving into the November 5th US stock market moves and what to look out for as we head into trading tomorrow, November 6th. From big wins and losses in the market today to key economic indicators, let's break down what happened, what's fueling these trends, and where things might be headed. Alright, let's jump right in. Alright, let's start by reviewing what went down in the markets today. November 5th brought a mix of volatility and steady moves in some sectors. 1. Major index performances. The S&P 500 finished the day with a minor uptick, closing up about 0.4%, boosted primarily by gains in tech and healthcare. The Dow Jones Industrial Average was relatively flat, hovering close to yesterday's levels, with a modest 0.1% dip, largely due to losses in consumer staples and financials. And the NASDAQ. It performed quite well, gaining nearly 1%, as tech stocks remained a safe haven for investors amid some cautious optimism in the market. 2. Key sectors and top performers. Today's standout sector was technology, with companies like Nvidia and Microsoft bouncing back strong following recent earnings reports. Healthcare also saw an increase, as big names like UnitedHealth and Pfizer gained traction amid expectations for steady growth. On the flip side, financials had a rough day, as investors digested last week's Fed statement and possible policy impacts on banks. Energy stocks were also down as oil prices continued to decline. 3. Influential economic indicators. Earlier this morning, we got some updated job market data that showed a slightly lower number of job openings. This suggests that while the job market remains healthy, it's showing some signs of cooling, which could influence the Federal Reserve's next steps. We also saw factory orders tick up slightly, signaling steady industrial demand. Investors are keeping an eye on these indicators since they could steer the Fed's outlook on future rate hikes. So, what's pushing the market right now? A few big factors are driving the sentiment. 1. Interest rate expectations. With the Fed hinting last week that it may hold off on further rate hikes, investors are feeling cautiously optimistic. While rates remain high, there's hope that a slowdown in hikes could relieve some pressure on companies that have been struggling with higher borrowing costs. 2. Corporate earnings. The earnings season is wrapping up, and most companies have reported better than expected results. This has injected some confidence back into the market, especially for sectors like tech and healthcare, where earnings have been particularly strong. However, some companies have issued warnings about potential challenges ahead, so the market is still a bit cautious. 3. Global events impacting the market. Outside the US, global factors are also at play. The European Central Bank recently took a more dovish stance, and tensions in certain regions are pushing some investors to seek safe haven assets. This global outlook impacts US equities, especially for multinational companies with exposure to European and Asian markets. Looking forward to November 6th, here are some things you'll want to watch. 1. Midweek earnings announcements. A few key earnings are on deck tomorrow, including major retail names. Retail companies are particularly interesting right now as investors try to gauge consumer strength going into the holiday season. If these reports show solid performance, especially in e-commerce, we could see some support for consumer discretionary stocks. 2. Bond yields and treasury movements. Keep an eye on bond yields. With the Fed hinting at a pause, any movement here will be crucial for the financial sector and could sway investor sentiment overall. If yields rise, we might see some pressure on high-growth stocks, as they tend to be more sensitive to interest rate fluctuations. 3. Inflation data coming later this week. While tomorrow doesn't bring any new inflation data, we're nearing the release of the next CPI report, which could heavily impact market moves. Investors are likely to trade cautiously until more is known about where inflation stands, especially since it affects everything from consumer sentiment to the Fed's rate decisions. 4. Global market indicators. Keep a close watch on the Asian and European markets overnight, as movements there can set the tone for how US markets open tomorrow. Any surprises, like shifts in policy from other central banks or unexpected economic data, can play into the sentiment here in the US. Based on today's market performance and the factors we just discussed, here are a few scenarios that could play out. 1. Optimistic scenario. If retail earnings come in strong and bond yields remain steady, we could see a rally in consumer and tech stocks. This scenario would likely be driven by renewed confidence in consumer strength, paired with continued positive sentiment around tech earnings. 2. Cautious scenario. If retail earnings are mixed and bond yields inch up, we may see a more cautious market tomorrow. Tech and healthcare might continue to perform well, but other sectors, like financials, might hold steady or even dip slightly. 3. Bearish scenario. If retail earnings disappoint and global markets show weakness, we could see a pullback, particularly in sectors sensitive to consumer spending and international trade. Investors might turn to safe haven assets like gold, and the US dollar could strengthen as a result. And that wraps up our recap for today, November 5th, and our forecast for November 6th. It's a dynamic market environment, and with so many variables in play, it'll be interesting to see how things shape up tomorrow. Remember, staying informed and watching key indicators is crucial in a market like this. As always, thanks for tuning in, and if you found this video helpful, don't forget to like, subscribe, and hit the bell for more updates. Stay smart, stay informed, and we'll see you back here for tomorrow's breakdown.